ASST stock, the baby MicroStrategy you missed.
Right, the one about them stacking, 7,500 Bitcoin with that unique equity play?
Exactly. Let's just jump right in. I think there are a few big opportunities here.
So my first thought is, the structure. It's very bullish up front.
The rocket catalyst section, yeah, high energy.
Exactly. But then all the major risks, dilution, volatility, they're all sort of tacked on at the very end.
Right, it feels a bit like an appendix.
And that's the weakness. It can feel like you're hiding the ball, which it can undermine the credibility you're trying to build.
So the goal is to integrate the significant risk factors right into the core narrative to, build that trust from the get-go.
Precisely. So when you talk about the short squeeze, the massive 35 to 40% short interest,
You have to immediately answer why it's so high.
yes, you bring up the short squeeze, and in the next breath you say, and the reason for that is the massive share dilution they used to raise $750 million. You connect the dots.
So the opportunity and the fundamental challenge are presented as two sides of the same coin. I like that.
It makes the whole thing feel more honest.
Okay, moving on. Let's talk about the numbers, the valuation thesis.
Yep, the core idea that the stock is cheap.
It's a compelling argument, right? You compare the market cap against the value of the BTC assets. Simple.
But there is a huge but here.
The $192 million Q3 net loss.
It's the elephant in the room. And the weakness is just calling it non-cash accounting noise. I mean, for an expert audience, that's just not enough.
It sounds a bit dismissive, maybe.
It does. So you really need to proactively clarify the financials to robustly support your valuation.
And how do you suggest doing that? Dedicate a whole segment to it?
I think so. You could even title it something punchy, like the $19.2 million accounting illusion.
Oh, that's good. Catches the eye.
And then you just break down why it's non-cash. Explain it's a mark-to-market consequence of holding Bitcoin. You diffuse the bomb first.
So then, when you get to the cheapness argument, that big scary number has already been neutralized.
Exactly. It lets the core thesis stand on its own without that distraction.
All right, final point. The baby MicroStrategy hook.
This is the core of the whole video, really. The difference between AST's preferred stock and, MSTR's convertible debt.
The script does a good job explaining the mechanics. The pipe deal, the SATA.
It does, but that's also the weakness. It gets a little lost in the weeds of how it all works.
And not enough on why it's a game changer for an investor.
Right. We need to be sharpening that debt-free differentiation for maximum impact.
So you're saying it's less about the specific tax structure and more about the safety? The freedom from debt?
Absolutely. It's about safety. I think you should frame that entire secret pivot segment around that one crucial advantage.
So maybe like a direct comparison?
A vivid one. For instance, you can say, MSTR operates with a ticking debt maturity clock over its head. There's real risk of margin calls in a downturn.
Whereas ASS has built a perpetual debt-free treasury.
Yes, and that makes their equity-based path the entire reason to choose them, especially if you're worried about potential crypto winter.
It becomes the central selling point.
It is the central selling point.
Okay, this was a great breakdown. So, to quickly recap the 3 actionable takeaways.
Yep.
First, weave the risks like that massive dilution directly into the bullish narrative itself.
Builds trust.
Second, tackle that $192 million accounting loss head on. Don't just dismiss it.
Demystify it before it becomes a problem for the viewer.
And finally, really hammer home that debt-free angle as the key fundamental advantage over MicroStrategy.
The safety net.
Exactly. Implement those changes and please send the improved script back to us. We would love to see it.